Go interactive with X-Ray, where we bring trading experts to you live in the platform. Choose sessions, watch live market analysis, and catch up on your favorite market insights anytime. Ask questions and go one-to-one with leading experts on gold, oil, FX, crypto, indices, and equities. X-Ray, your very own analysis team, right at your fingertips. That's higher trading from MarketsX.
2020 was a difficult year for us all. World economies have crashed. Financial markets showed us again how important it is to be aware of the global economy. And, believe it or not, many people have profited from the movements in the markets. This December, we bring you the biggest open source webinar series for beginner traders to help each and every one of you understand the basics of online trading and investments from industry experts. Learn from the CEOs is the biggest webinar series organized by InstructFX with the extraordinary participation of 5 CEOs of 5 top Forex companies worldwide. Join us live on Monday, the 14th of December at 1700 GMT for the grand opening with an amazing webinar on trading currency pairs with João Monteiro, CEO at 4XC. On Tuesday, the 15th of December, trading stocks and indices is the topic of the day with Phil Adler, CEO at ETX Capital, straight from the heart of London. Wednesday, the 16th, the week only gets better with Joe Rundle, CEO at Markets.com for an amazing webinar on trading commodities. Just when you thought that things can't get any better, on Thursday, the 17th, we have the Cryptocurrencies trading webinar with our surprise guest. Finally, on Friday the 18th, it's your time to shine in the Fidelity Gala Awards, where InstructFX is rewarding you for watching us live with amazing prizes. Join the biggest open source webinar of 2020 and learn what most Forex brokers don't want you to know from 5 reputable CEOs. Click on the link below and reserve your seat for the biggest open source webinar of 2020, hosted by yours truly, Andrew, the Chart Whisperer. Learn, observe, trade with InstructFX.
Boom, and we're live. Good evening, everyone, and welcome to the third and most requested webinar of the series, Trading Commodities this evening. How are you guys doing? How is everyone doing, first of all? Please type your comments, type your questions during the webinar, and we will have a Q&A session towards the end, guys. Let us know how the sound is, how the image is. Type a yes or no in the questions box, in the comments box. Let us know if we have sound and image so we can continue. And let us know how you are doing tonight, guys. It's the third day in this amazing webinar marathon week. Let us know how you find it. Let us know if you're struggling with anything. And we will do our best to help. Let's give everyone a fair chance to join us, and we will start the webinar in about 1 to 2 minutes, guys, okay? Meanwhile, I'm still waiting for your comments. How is the sound? How is the image? Type your comments in the comments box and support me, in understanding how good the quality is. Right, I'll run an advert and we're going to start the webinar in about 1 minute, guys. Okay, stay tuned. We're coming back live.
Discover how some of the top executives are trading their own companies with our Insider Trades tool. See who's been buying or selling stock and what their trades say about insider sentiment. Use this unique big data tool to make more informed stock trades. That's higher trading from MarketsX.
Right, we are back, guys. Good evening, everyone, once again, and welcome to the third webinar of the series, Trading Commodities. My name is Andrew, and for the last 10 years, I've worked in many retail and institutional Forex brokerages in Europe. Join me in this amazing journey and find out the hidden corners of Forex trading and CFDs in the biggest webinar series organized by InstructFX from 4 reputable CEOs of 4 reputable Forex brokerages worldwide. Have you ever wondered what it would be like if you have the opportunity to speak directly to the CEO of a famous international brokerage. What would you ask them? Well, wonder no more, guys. This week, every evening at 1700 hours GMT, InstructFX is bringing the financial markets to your doorstep. My guest for tonight has 20 years of experience, over 20 years of experience in the financial markets. He worked for some of the biggest investment firms in the UK. He managed numerous FX firms and led them to the path to success. And he's also the main sponsor of InstructFX daily broadcast. Ladies, gentlemen, traders, please welcome my guest for tonight, the man that took CFDs trading to another level, the man, the legend, the CEO, Joe Rundle, everyone. Good evening, Joe Rundle. How are you?
Hey, Andrew. Yeah, I'm really good. A pleasure to be here. Thank you very much for inviting me.
Pleasure to have you here, Joe, and thank you so much for accepting the challenge, the invitation. How are you, first of all?
Yeah, no, all good. I mean, obviously this year has been a strange year, but everyone's coping, everyone's staying safe, and that's the most important thing. And we're hopefully bringing some really interesting insights and challenges to the market and to our customers.
2020 was indeed a very difficult year for everyone. How was this year for markets.com?
This year was good. The volatility and the volumes and the lockdown has presented opportunities for us. It's presented opportunities for us to engage with customers that wouldn't normally have been able to have access to us. We've also had time to adjust what we've been doing with clients, and it's been an interesting year. I think it's been a changing year, and I think we'll all look back in a few years' time and we'll take the positives out of 2020. They may be hard to see now, but I think they are there, and I think they will emerge through the coming years, and we'll look back at this as a pivotal year in the world and the way it's changed for a lot of people.
It is a year that taught everyone a lot of valuable lessons. Right, this evening we have an amazing topic, and I know it's your favorite asset class. But before we get into that, there's something that happened today on the market, and I'm just curious to hear your opinion on it. Bitcoin, the good almighty Bitcoin, broke the 20,000 mark, and half an hour ago was trading as high as $20,625. What's your take on this one? Where do we take it from here with Bitcoin?
So I think 20,000 was a level that people have been looking for a long time. You know, we've seen this second rally almost in the cryptos, and 20,000 was a big psychological level. Now it's breached. A lot of people might put it down to Christmas, the Christmas Santa Claus rally, and we may see a little bit of selling off. But look, I think cryptos are here for the long term. They are becoming more mainstream. They're becoming more accepted. The regulators don't really understand them yet, and that will be embraced slowly. So I think this is an important milestone. It's a short-term milestone, and although 20,000 shouldn't really mean anything in the valuation because it's just a number, it definitely does. So, but I think it's now done, and now people can start talking about Bitcoin as an asset, not 20,000. And I think we'll see a medium-term run-up from here. I do think there might be a little bit of selling where the speculators were looking for that 20,000 handle. They cash in, they sell. So I wouldn't be surprised to see it pull back in the next couple of days. But medium-term trading, we should be looking for a higher move.
That's exactly what I was saying today at the US Markets Open broadcast. I said, guys, be very careful, because some people that bought Bitcoin a few days ago will close their positions. We might see a pullback. We might see a correction, and you don't want to get caught on the wrong side of the trade. Now, enough with Bitcoin. Commodities for tonight. Could you tell us, how did you get involved in the financial markets, and what made you fall in love with commodities? Why commodities out of all asset classes?
So I've always had a love for financial markets, and I've always wanted to trade and be involved in the financial pits, and that's what I want to do. Fortunately, I'm reasonably old now, so I wanted to be, I grew up looking at the people in the trading pits shouting. They were always commodity pits. That was the main thing. So that was kind of my passion. My job took me to working as a proprietary trader on the screens, but in the virtual commodity pits that were there, we traded a number of assets: gold, oil, some of the soft, more exotic materials. So it's always been an interest to me, and I've always been involved in it. And then through my career, we've worked with trading equities, but the equities that that really are interesting are the ones that are involved in the commodity markets. It always comes round in a circle. So I've always favored the mining stocks, the gold stocks, the drilling stocks. So it's always been, it's a really interesting asset class because there's so much news, geo events, and also real fundamental and technical things to get a handle on. So there's always an opportunity, and that's what I like about it.
Awesome. How was your start in trading, by the way? If you remember, about 20 years ago, was it bumpy or not?
Yeah, it's always bumpy when you start, and I learned a lot of really valuable lessons. I had an amazing mentor when I started, who taught me a lot of things. He was quite hard work at the time, and but those first few trades, first few learnings, it's a journey. You're not going to get into trading and find the winning formula on the first day, and the winning formula is different for every person. So it was certainly bumpy, and I remember working in London, going into the city and seeing all the superstar traders and me struggling by on a graduate job and not really earning any money. And it's bumpy, but it's exciting, and you look back at it with fond memories.
And how long did it take you until you saw the first consistent profits from the market?
It's a good question.
A year, 2?
Yeah, it went through phases. I first really got my success sort of 6 months in, where I could start making enough money to be in London and begin to enjoy London. And it's a constant learning. I find my trading goes through cycles. I have good periods of the year, good periods of my sort of the way I look at markets, and bad periods. And I got my initial cycle quite quickly. Like I say, it was sort of 4 or 5 months in, but then you go through a bad cycle and it can be quite hard. But it's all part of the learning phase. So it's an interesting, and especially with commodities, they're constantly changing. You're learning things new every week, different things.
Can you cut corners? Can you cut this learning curve or no?
No, basically, it's a really it's a long work. It's a fun job. It's a fun career. Everyone's still learning. I'm 20 years in. I learn things new every day that you don't know about. There are new ways to trade. The markets evolve. The underlying assets change. There are new assets coming to market. So there's no shortcut. You may be very lucky and dial into what works for you very quickly. There isn't a one size fits all, and the job to me is an always learning event, and it's great when you're always learning because it's constantly challenging.
As long as you're not hurting your bank account, yes. What would you say are the biggest mistakes you did as a beginner trader? Or what are the most common mistakes people do when they start trading for the first time?
So the most common mistake that I made was over trading. So it was trading too much. And trading, the way I was taught by my mentor was a two-stage approach: to take a fundamental view based on news, but also a technical view to back up your fundamental view. And that's what formulated my trading ideas. And then the mistake you make that I got sucked into the emotions of trading, and you would then look back at, my mentor was very good actually. He made me, at the end of a bad day of trading, look back at what I traded against my trading plan at the beginning of the day. And your trading plan may have been, I think gold is going up because, I think there's a risk on environment, and I think the technicals support that. And then that would be your trading plan for the day. And then you would get caught in the emotion, you would overtrade, and you would end up selling gold all day, even though the market was going up and your belief was it was going up. And that was where you got disconnected from your trading plan. And that was the biggest mistake. It's the emotions of getting sucked into trading.
Yep, London taught me the exact same thing it taught you. back up your analysis with the news. Yeah, we're back up the news with analysis. What do you think people should do to start this journey the right way? Is there a right way when you start trading?
I think the most important thing for me, and like I said, there's no one route. If there was one route and a set of things, it would be easy and everyone would be doing it. I had a passion for it. I always wanted to be involved in the financial markets. I read about them before I had the money to trade or had a job. I read about them all through school and university. So the initial starting point for me was it was something super interesting that I wanted to do in my spare time. So that's a really important start. And then it's delving into the subject and immersing yourself into it in the right way and making sure that you have a plan that you stick to. And like I say, the biggest difficulty for me was the emotions of trading, because it's real money and it's your
for everyone.
And that's difficult. And the emotions and you get sucked into overtrading. So when I started out, the biggest bit of advice I was told and given, and I think I pass it on to other people, is write a trading diary, because at the end of a bad day, you can look back at what you were doing and why you were doing those trades at the time. It also forced me, before I traded, I had to write down the reason I was trading, the levels I was doing it, why I was doing it. So it just made you pause a little bit. And then it just helped me not get involved. And then I could, and you have bad days trading, and I have bad days trading, and I still do have bad days trading. And at the end of it, you can look back at it and you can see what was wrong with you. And you can generally look back at it from a higher level and see, that I wasn't quite in the right mindset today, or I didn't stick to my 10 rules that I've laid down. And then you can be self-critical. So that's important, I think, is when you're starting, to be self-critical, not too emotionally attached, and be able to just detach yourself from that trading emotion.
Have a plan and stick to the plan is one of the keys to long-term success.
Yeah, having a plan. I mean, it's if you the easiest thing to do is to look back at a day and decide what you should have traded. The second easiest thing to do is to plan a day and make your trades in advance. And actually, if you make your trades in advance, well, you know what your points are, what you're going to do, why you're going to do it. Traders are pretty good. Most people are pretty good at it. It's the emotions that get detached from it. So having the plan and being detached, if you can, from yourself, can really make a difference. It makes a difference for me.
I understand. Yep, I'm with you. 100% on the same page. Now, can I ask you a tricky question?
Yeah, go for it.
How does your trading portfolio look like now versus back in the day? Did you have a portfolio back in the day?
So I was very, very short-term trading, but when I first started out, my mentor was super. I did upwards of 400 or 500 trades a day, looking for very, 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 very small movements in the markets that I was trading in. And that was a full-time job. I mean, I immersed myself. I had 3 screens looking at data all day, and you did it. My portfolio now is much calmer, much longer term, there is no right answer. You can do 500 trades a day, 400 or 500 trades a day. But I was only trading one asset a week, so I never mixed up my assets, and you kind of really got to know every price movement, every little nuance in that market, and that you could benefit from that. But now I don't have the time to do that, and my trading is much more longer term, calmer trading. So it's different, but the lessons that I learned is still the same. I go into a trade for a reason. I go into a trade with an outcome that I understand that I'm looking to get. I don't change my limits and stops unless there's a significant reason. So the basics of that trade, whether you're doing 500 trades, 1 trade a year, they're the same. The rules are there, and stick to them. The inputs that are coming in are different, but my basic reasons I put on trades and my mix-up of portfolio is the same, although looking at it in a bit of paper, it's vastly different.
Is it important to have a portfolio when trading, or you can just trade without? You can just trade 3-4 assets and that's it. You stick to that.
Again, it depends on what you're trading, how you're trading. So when I was trading 300 to 500 trades a day, you could only process so much data, and so I could only process and trade one asset, and I didn't change my assets. I only traded one asset a week. And if I changed, it would be hardly ever changing. So that was when you're that engaged with it, I would recommend only having a single focal point. Having diversification in a longer term portfolio is hugely important. I think it's really important that you diversify yourself away. And when I was trading very short term, I didn't hold positions for very long. It was in and out, in and out, in and out. Diversification and having across multiple assets, multiple geolocations, multiple venues, multiple inputs, multiple reasons why you're doing the trade is important, because actually the most important lesson that I was taught is even if you guess every trade, so you buy one, sell one, buy one, sell one, you will win 50% and lose 50% of them, but you will lose money because you're paying transaction costs into this. Yes. However, if you make sure that you buy trades and your limits are higher than your stops and you have a reasonable chance of it, you can guess 50% of them and you will make money. So the important lesson on why diversification in the portfolio is important. There's not a single person in the world who can get every trade right, and you shouldn't aim to get every trade right, because then you're missing opportunities and it's not feasible. So the trades I do and the portfolio I have are on different assets, and some trades will work, some trades won't work, some trades will be great, some trades will be average. And that's the point
of having a portfolio, to balance your trades.
Yeah, exactly. And things may change you may do an amazing trade for all the right reasons and have all the right inputs, and the trade is 100% the right thing for you to do in your system, and Corona can come along and ruin the trade, or a black swan so there's 1,000 things that can change it that are beyond your control. So diversification is important, and accepting that losses happen, and it's part of trading.
All right. Now, I hope everyone has an idea how you started, and everyone understands how important it is to be consistent in what you're doing and learning every day. Let's jump on the presentation. What do you say? Are you ready? Are you up for it?
Yeah, let's go.
Awesome. All right. Your favorite asset class, commodities, this evening. Right. Where's the presentation? There it is. Right. There we go. Trading commodities. Now, before I jump into the presentation, for compliance purposes, I have to read a disclaimer. All information presented during this webinar is from public sources and should be treated accordingly. Our content is intended to be used and must be used for informational purposes only. It is very important to do your own analysis before making any investment based on your own personal circumstances. You should take your own financial decision or independently research and verify any information that you see and wish to rely upon, whether for the purpose of making an investment decision or otherwise. We would like to draw your attention to the following important investment warnings. The value of shares and investments and the income derived from them can go up as well as down. Investors may not get back the amount they invested, and past performance is not a guide to future performance. Now that we have compliance out of the way, let's get started, guys, with the first question. What are commodities? What is a commodity? In economics, this is the definition. In economics, a commodity is an economic good or service that has full or substantial fungibility. That means it can be transferred into cash. The market treats instances of the good as equivalent or nearly so, with no regard to who produced them. In other words, how would you say this in layman terms, Joe? What are commodities?
So commodities, they're stuff that's physical, that can be be seen. It's not a theoretical thing. Your examples there are great. The commodities are stuff you eat: wheat, iron ore, the petrol, the oil that you use in your car. It's stuff that's there, and people, there's a real economy behind it. So I think your picture there shows coffee, and it's great. That's probably the most famous commodity.
So basically everything that comes from the ground, yeah, and more.
Yeah, I mean, there's raw materials. It's not just from the ground. It's mining. You can make a commodity with derive a commodity by processing it and turning it into other stuff. So wine is a commodity, commuter chips commodities, chemicals are commodities. So it's a hugely diverse industry, but it's why I like it. There's always news and there's always information behind the asset that you're trading.
And sometimes they can be predictable. All right, let's move on to the next slide. Some characteristics of commodities, guys. Subject to regulation, you're going to have the leverage varying between 1 to 10 and 1 to 200. I believe now at the third webinar, you start understanding the use of leverage a bit better. Trading hours, almost 24/7, Monday to Friday. Some commodities have an expiry date. And the advantages are high leverage, high volatility, and sometimes commodities can be predictable. Is that right, Joe?
Yeah, totally. They can be predictable. And I think, behind a commodity, there's always a story, whether it's technical, whether it's the fundamental news. You can really drill into a commodity and understand it and get to understand the news. And, people can associate orange juice is a great example. When there's a hurricane in Florida, which is a big orange producing area, they can see that those commodities will be affected by that news event that they can read and see. And there's a movement that people can understand and predict because they are almost, back into layman's terms, it makes sense with what's happening.
Yeah, like, for example, a hurricane in the Gulf of Mexico, when they shut down 50% or more than of the oil rigs.
Exactly, and that's, people, and why people can relate to them is because underlying the behavior of commodities are real people buying and selling these commodities. When Corona came in and lockdown, obviously oil price fell dramatically. Now that's because everyone was sitting at home and not using petrol.
Because there was no demand and a lot of surplus.
Exactly, and so people can see that with their real life and what's going on, and they can associate. So it's a really good. That's one of the reasons I particularly love commodities, because you can get a feeling for it and understand what's going on.
So do I. All right, let's move on to the next slide. Types of commodities. Guys, we have many types of commodities. Just like Joe Rundle was saying a minute ago, almost everything is a commodity. Everything that can be transferred into cash. So we have metals, we have energy, and we have agricultural products. I'm just going to focus on these ones for tonight, the most traded ones on the CFDs market. Okay, these are the type of commodities that most people know about and most people trade on a Forex platform. Would you add anything on top of this, Joe?
I think you've got them all. There's the. No, I think that's the kind of the main ones. Obviously, there are seasonal ones that come in. I mentioned orange juice earlier on. There's one that we see quite a lot, but they are the main ones, and they're all, people can associate with all of them. They're all big industry traded stuff.
All right, so these are the main types of commodities that you can trade on a trading platform as CFDs, guys, and some trading platforms do have more. If you know what you're doing, then by all means, feel free to do it. Let's move on to the next slide. How does it work? Okay, basic economic principle of supply and demand typically drive the commodities market. Lower supply drives up demand, which triggers higher prices, and vice versa. Let's remember, for example, I think the most eloquent example is the oil price. That when COVID reached its peak, we saw oil price going down to almost zero on the trading platforms. Yeah, because there was no demand, and it was the market was flooded with oil. So basic principles of supply and demand drive the commodities market. In the right-hand side of the screen, guys, you're going to see trade-weighted USD versus the gold price. Okay, some commodities move in the other direction from gold, and this is again the best example. Gold and the US dollar, they move in the opposite direction 99% of the times, I'd say. Am I right, Joe?
Yeah, absolutely. You are right. They're sort of, gold is a safe haven. It's an inflation hedge, and which is completely opposite to the US dollar. So they're a very nice, and your chart there kind of really nicely illustrates how that happens.
Thank you. All right. So this is how it works. Very simple principles of supply and demand. More supply and less demand will take the price down. A lot of demand and no supply, or little to no supply, will usually translate in prices going down. Right. Let's move on to slide number 7 and see how does it work, trading commodities as CFDs. Now, many commodities such as gold, corn, sugar, and other products are traded on the futures market using future contracts which have an expiry date. Future contracts are typically divided into several, usually 4 or 6 expiry dates throughout the year. Each of the active future contracts can be traded for a specific amount of time, and then the contract expires and cannot be traded anymore. Now, I'm going to ask you something, Joe, that everyone is asking me, and I'm gonna pass the question. Okay. Why do they have an expiry date?
So they have an expiry date because in the real world, when people are trading these assets, they're actually doing so because an oil producer or an airline actually wants the oil in some point in the future. So they're buying oil today and for a future delivery in, say, January or June next year, and they're doing that because
it's better.
Yeah, that's what they want to do. And there are some people in the commodity market who are not trading for financial gain. They're trading because they genuinely need the oil, the orange juice, whatever it is, at the end. So the way the delivery of those works, so when you buy a futures contract, just to make sure you don't get a barrel of oil delivered to your door the next day, they're delivered into futures so that if you hold that contract at the end, you will get a couple of barrels of oil at the end of it. So that's why they're done into futures, to facilitate the real world economy.
This is one of the best explanations I've ever heard. Thank you so much for that. Okay. Moving on to and then the contract reopens from the brokerage side, reopens almost immediately. Yeah, it takes a couple of minutes or 5 minutes to.
So we obviously don't want our clients, and most clients don't want to be getting a tanker full of oil at the end of the contract. So what we do is we do what the banks are doing for the people who don't want the oil, is they effectively roll the contract into the next one. So we're doing that for the client, unless someone wants a barrel of oil, and they can phone me up and I'll deliver them one.
Okay. All right. This is how it works. Yeah, and you can see when you're looking at your asset on the trading platform, guys, if you're looking carefully at commodities, most trading platforms do show you when the expiry date is. Yeah, next to the ticker, you're going to see, for example, in this case, we see December 18. So we know this contract will expire somewhere in December or just before December.
Yes,
all right. Now, let's move on to the next slide. Contract specification. Here is where it gets a bit complicated. Every asset class has different contract specifications. Some assets have a different leverage or margin requirement. Others might have an expiry date, and others just might not be available for trading. It is imperative. It is very important to know where to read all this information before we start trading. In this case, for example, we can see that gold has a leverage of up to 1 to 200. It doesn't have an expiry date. And the trading hours are Sunday, 2200 hours to Friday at 2100 hours. We can also see the swap, the rollover, if it's positive or negative. Yeah, and we can also see the initial margin. How much money do we have to put in as collateral? Is that correct, Joe? Am I missing?
No, you've got it all, and I think it's really important that when you go into a trade, and it comes back to one of my first points, that you understand what you're trading and why you're trading it, because it's very complicated, and we try to simplify it, but you may go into a trade, you may have the right reasons, you may understand, you may have everything, and then what you predicted would happen, but you may have traded the wrong asset, and then it trades in a slightly different way. And that's one of the quirks of the commodity market. For some reason, it might go up, and the real world say it's going up, but the futures contract you're trading goes down because the futures contract further out is trading up. So you be very careful and make sure you're trading the right asset for the right reasons.
And make sure you know your contract specifications, because you might trade one lot on Euro USD, and you might want to trade one lot on gold as well. One lot on gold won't be the same as one lot on Euro USD, because it might have a different leverage, and you might see like $2,000 going from your account when you open that one lot on gold.
Exactly.
Okay. Right. Slide number 9. And this is where it gets very interesting. How to trade commodities. Just like currency pairs, commodities move between certain support and resistance levels. Yeah, we're in a trend. It is entirely up to the trader to detect the market movement and open the position accordingly. Also, commodities have a positive or negative correlation with certain currencies, like the US dollar and the Aussie dollar, for example. And in this example, we see the movement of gold futures and the movement of the Aussie dollar versus the US dollar. And you can see the similarity. You can see that the Aussie dollar and gold usually move in the same direction. Yeah, and this is known as a positive correlation. Now, why do these two assets move in the same direction, the Aussie dollar and gold, Joe?
So the Australian economy is a real commodity-heavy economy. It really, a lot of the economy, the actual underlying economy in Australia, is producing commodities. It's a huge producer of gold. It's a huge producer of iron ore. It relies heavily on those industries for its economic health. So if the price of iron ore, for example, goes down, it's bad for the Australian economy. That's why they're very heavily reliant on each other. And another example of that is the Canadian dollar, which is another commodity-heavy currency. So yeah, so you do find these ones that are kind of, and if you, again, it's you may cover it on another slide, and I apologize, but the Aussie dollar, if you want to have exposure to commodity markets across a big range of commodity markets, you can consider trading the Aussie dollar because it gives you that exposure. It's almost across lots of assets.
Extremely well said. Thank you so much for that. Let's move on to slide number 10 now and see what affects commodities. Apart from God, what do we have? Supply and demand. Weather conditions, government policies, yeah, the good old tariffs that we're gonna probably miss from Donald Trump. Inflation, yeah, global economy, yeah, see the COVID pandemic and economic growth. Have I missed anything? Or these are the main factors that affect commodities?
Yeah, they're the main ones. I mean, supply and demand is what drives everything, especially with commodities. The weather conditions that are in certain ones, so the agricultural commodities, less so into the oil and into the gold. And you saw, like you said, Donald Trump with his policies and tariffs.
I should have had Donald Trump on the slide.
But I think you're going to see a round two of it. You see a lot of what's happening, and you talked about the Australian dollar before. A lot of Australia is obviously going into a trade spat with China. And that's where China buys its iron ore from. So it's a really big concern for Australia as to what happens there. So policy is really, really important.
Australia, I think, will always look to have a good relationship with China because most of whatever Australia is producing goes to China.
Exactly, and that's a problem. But they're going through a strained relationship at the moment, and it's an interesting one with what's going to happen there. The Australian dollar is a really interesting asset for me this for 2021.
I felt very sorry for the Aussie dollar because it's taking a beating. Every time it gets the chance, the Aussie dollar gets a beating. And I felt very sorry for the Aussie dollar recently. Hopefully it will recover. Right. Trading strategies. Again, very important. Know your asset. Check the US dollar. Always check the US dollar index, guys. Check for correlations and check the contract specifications. What would you add on top of this, Joe?
I think the most important is know your asset, because if you know your asset really, and you put it at the top, and it's quite rightly so at the top. So if you know the asset, you know what affects it, you know what it's doing. You really get, that's the basis of your trade. So if you know that you're trading orange juice and there's a hurricane season, you know there's going to be volatility, you know that that's going to happen, and you may take a view on that, and you may take a view that the market is wrong. But if you don't really understand what affects that asset and what moves it and how it works, and the correlations with other assets, you're going to struggle. So to me, it's research your assets.
And know your assets. Very, very well said. I've seen traders in the past that were buying the US dollar index and they were buying gold in the same time, and they were selling silver on the other hand. And it didn't make sense. So checking the correlations and knowing the asset, I think, are the two main ones for everyone.
I agree.
All right, let's see. Slide number 12. Oh, okay. Now it gets really sexy, I might say. Take profit and stop loss. How important is it to use a take profit and a stop loss in your view, Joe?
The most important thing for me is having a plan for a trade, and my mentor drilled it into me. Every trade I had to do, and when I got excited and did over trading, I had to pause, and before I did a trade, he made me write down my take profit and my stop loss for every trade. And like I said at the beginning, if the stop loss, if you wrote down a take profit that was 10 points and a stop loss that is 40 points, you've got to be right. If if 50% of the trades go up, or you flip a coin, you've got to be right 4 times more on the take profit side, which is a really unrealistic number. So I think it's super, super important having take profit and stop loss, and then not changing them, or if you do changing them, understand why you're changing them, not because of the emotion of the market. So that was the fundamental way that I learned to trade. And it becomes second nature. Obviously, when you're doing 500 trades a day, you can't write everyone down, but the trade that you're doing is a repetition of previous trades, so you know the plan. But yeah, it's the most important thing.
It's imperative, isn't it? This is the ratios, let's say, between stop loss and take profit can be 3-to-1, 5-to-1,
Yep.
10-to-1 if you're lucky. All right, this is an example of take profit and stop loss on a buy position, guys. And in the next slide, you're going to see an example of take profit and stop loss on a sell position. All right, these are the examples. I went over them last night. I'm not going to go over them in detail again tonight, but I think you got the point. And look at the placement. Yeah, look at where that stop loss is placed and where that take profit is placed. Yeah, there is usually a ratio of approximately 3-to-1. Yeah, between the take profit and the stop loss.
I agree. And I just say it's very important. The ratio is important. 3-to-1 is a good ratio. But what you shouldn't do is force a trade. So you may have a trade that has a target price, a take profit that's where you want it. You shouldn't manufacture your stop loss, because if the stop loss isn't at the right level, you're going to get stopped too early. And sometimes you can have trades that look amazing, but you can't get the stop loss on in the right place. And so you don't do the trade. You have to walk away from the trade.
Right. Very good point. Very good tip. Let's have a look at slide 14 now and see the market trends, guys. See, trading is not that complicated if you know how to look at a chart, if you know what to look for. Basically, we have 3 big trends: a downtrend, a ranging market, and then an uptrend. Usually, the ranging market signals the end of the trend or the beginning of another trend. Is that right?
Yeah, absolutely. In that chart, so a really nice chart, and the trend is your friend. Never trade against the trend, unless you've got a really, really, really good reason to. And the worst days I've had trading, I've plotted on a chart, and let's take the right-hand side of that chart, the upward trend, and I plotted on a chart, and literally I sold it all the way through the day. And if you look back at it, you sit there and go, how could I have possibly sold this market? Because it was clearly going up, and you only have to look at it, and it was clearly going up. So, they're the worst days when you refuse to obey the trend. And sometimes my trading was always fundamentally backed by, and if I believed it was going down but the trend was going up, I would step away from the keyboard because it wasn't going to be an asset that I would trade that day.
The exact same thing happened to me, and it cost me dearly. I'm laughing now, but I cried for about 3 months when it happened to me. And I was fighting the trend, and I just didn't get it. I was too sucked into those buy and sell positions, then zooming out a bit and understanding that it is an uptrend. Stop selling it.
Exactly. That's very trading.
All right, let's move on to slide number 15, guys, which is the Q&A. You've been quite lazy this evening, guys. You didn't type too many questions. I do have a few questions though, which I'm gonna take. Now, quick disclaimer, for the questions. You might not see the questions. We are streaming live on 3 different sources, okay? So if someone from a different source is typing a question, you, which are watching on a different source, you're not going to see it. However, I'm going to take a few questions tonight. Wow, very good question. I have my eyes set on this question for a minute now. Michael is asking, can you hedge your positions on commodities with stocks?
Good question. I would say it depends on what time frame you're looking at. So if you're looking at if you're looking very short term, I think it's very difficult. But yeah, you can if you've got a position. And I had a client who did this. They were a consumer of gold. So they actually, in their business, they actually had to buy a lot of gold, and they hedged their position by selling similar companies to them. So they were a jeweler's company. So they obviously used gold when they were selling. And they saw that to hedge that position, they sold other stocks that were in that sector. So I think you can, but you have to be at it's not a short-term trade. You won't be able to do it short-term, but in a long-term position, you can. And it's just portfolio diversification at that point.
And risk management makes a lot of sense. So there's your answer, Michael. Hopefully that will help. Hey, Dennis, my client, you just exceeded yourself tonight. Well done. Thank you so much, Dennis. Dennis has been watching us since Monday. He's here at every single webinar that we do. Thank you so much for the kind words, Dennis. Right, let's move on to another question, guys. Right, good question from Joy. Joy, what amount should I start trading with if I want to trade commodities? That's actually a good question. What would you say? I mean, can you start trading commodities with $250?
Yeah, you can. I mean, you just have to adjust your trade sizing. Trading commodities should always be the same in terms of your risk management, and it shouldn't matter whether you're 250 or 200,000 or 2 million. You should be going to the trade with the same, and you shouldn't be looking at doubling your money quickly because that will be taking a very risky trade. So what you should start with is feeling comfortable with anything and learning and making sure you build a system. When I first started trading for a prop firm, the trade sizes we were doing were like £1 a point. The nominal below it was very, very small, but it's still the same applied for when you got bigger and bigger and bigger. So you start with what you're learning. So don't start to make a lot of money. Start to learn. And make sure you will make mistakes, and make sure you can afford to start doing that. Treat your initial money as a payment for a course, in essence, what you're learning, and make sure you learn. And then once you've learned those lessons, scale it up and trade in sizes, and you can take that knowledge and turn it into successful trading if you're disciplined.
Very nice answer. I usually encourage or don't encourage my traders to start with the $250 when they want to trade commodities. I'm telling them, if you want to trade Forex and get a feel of the market, it's okay, because the leverage and the margin requirements tend to be much lower on Forex. While if you go on commodities, then wow, you're gonna have on some assets extremely high margin requirements, so you need a bit of capital behind you. I have an interesting question from Praveen, which is addressed to you, Joe. Question for Joe: if you were to start your career again, would you still go for a career in trading? Wow, what a nice question.
Yeah, definitely. I love it. I it's a nice career. It's a nice industry. It's something I've always had a passion for. So it's something I want to do from when I was a young kid. So I don't think I would change it. Of course, you're going to do things differently and learn things differently, but part of the learning and making mistakes is where you are. And the one thing that I think this pandemic has, the positives that will come out of it, is people will be able to work remotely and work in a completely different way. Trading is one of those things you can do anywhere. You need a laptop, you need a
good internet connection. A good internet connection.
Good internet connection you definitely need. And you can do it wherever. So, the research in your systems can work. So would I change? No. I'm very happy in my career, and I would definitely do it again.
Wow. What a nice answer. Right. Okay. And the last one, guys, Mr. Patel is asking, when do you come to India, guys? When the pandemic stops? I don't know. When are we going to India, Joe?
I've never been to India. I'd love to go to India, but I can go nowhere at the moment. But I think, the market, like I just said in my previous answer, the market is opening and changing. And, we have a lot of clients from India who are super interested, and gold is a big driving factor in India. And it's one of the things that our Indian clients trade a lot. And that's because there's a connection to it, and they like trading it, and they understand the economics very much. And it's a really good place. I'd recommend anyone to start trading in something that they have a passion for within it and understand. So, our Indian clients really understand gold. They like it. It creates passion, and they can see the economics working in real life. So hopefully one day we will get to India once the world opens up. I think it will be next year.
Touch wood, late next year, because we're waiting for the vaccine to arrive, first of all, and then the airlines to open and so on. Right. This was it from our side tonight. Joe, thank you ever so much for being with us tonight and for supporting InstructFX in delivering more content like you do.
Thank you very much. It's been a pleasure.
Thank you for finding the time.
Thank you very much.
And I'm looking forward to another webinar, maybe a podcast. I'm doing podcasts as well, and maybe we can approach different topics.
Yeah, always super interested.
All right. Guys, Joe Rundle was with us tonight. Joe, thank you once again ever so much for being with us tonight, and I'm looking forward to seeing you soon.
Thank you very much.
Right. Guys, Joe Rundle was with us tonight for an amazing round of market talks, commodities trading. Lovely information, lovely person, and I hope we helped you this evening understanding how commodities trading works. Get in touch with us on instructfx.com, info@instructfx.com, or thechartwhisper@gmail.com. Don't forget to join us tomorrow night, guys, same time, same place, for an amazing round of cryptocurrencies trading with my surprise guest. Don't forget, Bitcoin reached all-time high today and exceeded the all-time high, trading close to $21,000. More about Bitcoin tomorrow, guys. Join us tomorrow evening for another round of great market talks with my surprise guest. Until then, remember to trade responsibly, and may all your trades be in the money. Have a good evening, guys.